Let's talk about optimal product mix decision. Now, one thing you need to understand is that even you as an individual, you don't have all what you want. You only have what you need, isn't it? Because if you have all what you want, you will not, you will not appreciate God. All right? You want money, you have it. You want house, you have it. You want spouse, you have it. Any to say you needed to even thank him for whatever he has done for you. It's the same thing as an organization. No company, no matter how big, no matter how good, no matter how worthy is a company, you cannot have all that you want. Okay, therefore, the resources available to any organization is limited in supply. Okay, the resources available to any organization is limited in supply. Therefore, the little that the company has, the little resources that the company has, how is to be allocated among competing product line is what we know as optimal product mix or linear programming. Therefore, what do you mean by optimal? Let's put it in the right perspective. The optimal product mix involves the process of allocating limited scarce resources among competing product lines in a judicious and efficient manner in order to maximize the organization's contribution. Okay, in order to maximize the organization's contribution. It should be noted that the optimal product mix decision is used when there's only one constraint, when there's only a single constraint. So that is only when you use optimal product mix. Now, when a company does not have sufficient factor of production, when you say factor of production, what we simply means is material kilogram, labor hour, or machine time. It's different from the factor of production you are familiar with under economics, land, labor, capital, and entrepreneur, not those ones. As far as performance management is concerned, factor of production are those resources required to produce, like material kilogram, labor hours, or machine hour. So all these resources are not sufficient, are not sufficiently available. Therefore, how the company will allocate it among competing product line, all right, is what to take advantage of market condition or to maximize contribution is what we are talking about. That is the optimal product mix. Okay, so when these resources are not sufficient, the company will need to allocate it among all the relevant product range, okay, to maximize contribution towards profit. Now, as far as optimal product mix is concerned, that's what is called constraints. Constraint is also known as limiting factor or bottleneck. The constraints represents anything or any resource that limits the ability of a company to take advantage of market condition or to maximize contribution towards profit. That is what limiting factor is all about. Anything that will limit the ability of a company to achieve its goal, all right, is known as a constraint, limiting factor, or constraints. We have single constraints. There's also multiple constraints. So when only one factor of production is limited in supply, then that is a single constraint. But when there are multiple constraints, when there are more than one factor of production that are limited in supply, then that is what is known as multiple constraints. So under the single constraint, the key limiting factors should be used to allocate the resources. All right. The key limiting, when you have only one constraint, that is when you consider optimal product mix. So under the optimal product mix, you use key limiting factor to allocate the available resources. When there are multiple constraints, you need linear programming. You cannot use key limiting factor. Rather, you need linear programming to allocate the limited scarce resources. So when we get to linear programming, I will be telling you more and more as per that. So let's focus on single constraint, whereby, of course, that's what relates to this topic, which is optimal product mix decision. So, like I mentioned to you, The resources we are talking about are material, kilogram, labor hour, or machine time. Those are the resources that is required for production, right? Now, what are the procedures involved? What are the procedures involved? Let me close this so that I can explain to you in details what you should do. And once I'm done with explanation of the procedures, then we can close the class for today. All right. So procedures involved in procedures involved in allocation. Procedures involved in allocation under single constraint. Under single constraints. Okay, what are those procedures? Number one, identify the key limiting factor. Identify the key limiting factor. So when you are given a question or given a scenario question, and you have to determine the optimal production plan or optimal production mix. So all you need to do just go straight to the question and identify the constraint that have been given to you. Is it that material is not sufficient? Is it that labor hour is inadequate or machine time is not sufficient? So if that is the case, just go into the question, identify the key limiting factor. One of those under optimal product mix, only one factor of production will be limited in supply. Now, how do you then identify that's what I'm trying to say. How do you identify the key limiting factor? This can be done by comparing, okay? This can be done by comparing, okay? By comparing the required resources with the available resources. Okay, whether it will result in a shortfall, in a surplus or shortfall to the organization. Okay, that's what you need to do. To the organization using the formats below. Let me show you the format. Because you don't have the format in the material, that's why I said, let me write it down for you. Now, in all cases, whether you want to do linear programming or optimal product mix, because examiner will usually tell you that the material is not sufficient or the labor hour is not sufficient. Don't listen to whatever examiner is telling you. You have the responsibility to go into the question and confirm. You need to compare the required resources versus the available resources. At times, examiner may want to put you into express, all right? So you need to do this. It's very important. Now, what is the format? You then say confirmation. The heading of the format is confirmation of insufficiency in key factor. Insufficiency in key factor. Like I said, the key factor is that resource that is limited in supply. That's the key factor. So what you are going to do in this step one, so you then create a column for the products. Okay? Create a column for units. Then you need to determine key factor per unit. This key factor per unit, examiner will never, in most cases, you are not going to be given. So you are the one that will determine it. Then you have a column for total key factor. Okay. So say, for example, we have products A, B, and C, and you are given these units. So you need to go and calculate the key factor per unit. How do you determine the key factor per unit? So you can say key factor, let me put it there, key factor per units. I will give you two different examples. Say, for example, the key factor per unit is material kilogram. Therefore, material kilogram per unit, okay, is calculated as total material or material cost is calculated as material cost divided by material per unit. Material per unit. So this will give you the material kilogram per unit. So once you have the material kilogram per unit, in this case, we're assuming that the material is the key factor. Then you come and put it here. Then secondly, if the key factor is labor cost, so you need to determine if the key factor is labor hour, so you need to determine labor hour per unit. How do you determine labor hour? Labor hour is labor cost divided by labor rate. So when you do this, it will give you labor hour per unit. So this is how to calculate key factor per unit. If it is material time or material hour, sorry, machine hour, that is the limiting factor. The same way you calculate for labor, the same way you are going to do that. So in any case, once you have calculated the key factor per unit, come and put it here. To get total key factor, just multiply with number of units to get the total key factor. Then you add up all the total key factor. You add it up. This represents the total required key factor. So whatever you have here is what is needed for production. That's what is needed for production. So you need to compare this with the total available key factor. Total available key factor. So the difference is what is known as either a shortfall or a surplus. Surplus or shortfall. Okay, so if the available resources, if the required resources is more than, notes, let me just put it, notes. If the required resources, required key factor is greater than available key factor. Okay, let me do it this way because of space. Okay, let me just continue. If the required key factor is greater than available key factor, it is a shortfall. It is a shortfall. But if the required key factor is less than the available key factor, it is a surplus. If what you need is less than what you want, then of course that's a surplus. When there's a therefore, when there's a surplus, there is no constraint. When there is a surplus, There is no constraint. Therefore, do nothing. Therefore, do nothing. Because once you have a surplus, since there is no constraint, you don't need to worry yourself. Do nothing. That's it. Now we move to step 2. Step 2 says that we are going to ignore the step 2. The step 2 says calculate key factor per unit. Okay, we've already calculated the key factor per unit. That's what you have here. We've already done that. So it's already embedded in step 1. So you can ignore it. Then step 2 now, calculate, or before we do that, ascertain, okay? Ascertain or confirm if management, ascertain or confirm if management has placed priority or given minimum allocation given minimum allocation to each product line. Now, what do I mean by this? At times, examiner may say that because of maybe there's an existing conflict between the line managers, management may decide that a minimum allocation should be given to each product range. Say, for example, you want to produce 15, you have 15,000 units to produce. Therefore, you can say, and maybe, for example, you have 3 different products, product A, B, and C. The management can decide that each product, the company should produce 2,000 units across all the products. That's about 6,000 out of the 15,000 units. So the remaining 9,000 units will then be allocated based on the contribution margin. All right. So you need to confirm if management has given priority or place priority or given minimum allocation to each of the product line. All right. So if you don't have that option in the question, then you move to step next. Step 3 is to calculate contribution. Calculate contribution or saving per key factor. So you already know how to calculate contribution. Let me just show you. Contribution per unit first. Calculate contribution per unit. That should be the first thing. Calculate contribution or saving per unit before you go to contribution per key factor. Okay. Now, you then say contribution per unit. There are different ways you can calculate your contribution per unit, depending on the information available in the question. Say, for example, you are given selling price and variable cost, then you can say contribution per unit equal to selling price minus variable cost per unit. If in the question you don't have selling price, but you are given fixed cost and profit, then contribution per unit can be fixed cost plus profits per unit. Okay, these are some of the ways in which you can calculate your contribution per unit. There will always be variable, there will be information for you to calculate your contribution per unit. Now, the savings per unit will only be computed if it is optimal mix involving make or buy decision. You know, it's under optimal mix that you calculate savings or deficits. So it's the same thing here. So if you have a question that involves optimal means involving make or buy, then that means you need to calculate savings. In this situation, there will be nothing like contribution. Then step number 4, you need to calculate contribution or savings per key factor. Okay, how do you do this? This can be computed using the format below. Let me just show you. This can be computed Okay, let me do calculate. So I did not even write it properly. Okay, calculate contribution or savings per key factor. Let me match step 4 and 5 together. Per key factor and rank the resulting figures in a descending order. Okay, this can be done using the formats below. Okay, so when you want to determine contribution or savings per key factor, then you can say, of course, you just say contribution. If it is contribution, you say contribution per, if the key factor is material kilogram, you can say contribution per material kilogram. If it is labor hour, contribution per labor hour. So just say contribution or savings per key factor. Okay, that will be the heading. Say, for example, you have 3 different products. Products A, B, and C. Okay, then you now pick the contribution or saving, whichever one, put it there. Then the key factor per unit that you have determined in step 1. The key factor per unit that you have determined in step 1, you put it there. It could be material kilogram, it could be labor hour, put it there. Then you now determine the contribution or savings per key factor. Okay? So what this simply means is that you divide the contribution / saving by the key factor, you divide it together. All right, let's say this is X1, or this one are X1, this is X2. Okay, you can then say X1 divided by X2. X1 divided by X2. X1 divided by X2. Okay, whatever is your answer, now write your answer here. That's your answer. Write your answer there, equal to whatever you have there. Then the next thing you need to do now is to rank your results you rank the results you have in a descending order. So you then say ranking. So you rank in a descent according to the highest contribution / saving per key factor. Let's say A has the highest ranking. This will be first, second, then third. Because it is based on this step 4 or step 5 that you are going to carry out your allocation. Because based on your ranking, whatever you have as the highest ranking will be the first product to be allocated to. Okay. So in this case, A will be the first product to attend to before you consider product B. Now, step 5, prepare allocation table. Prepare allocation. Let me rewrite that. Prepare allocation table. That's another step. How do you do this? In your allocation table, you are going to create about 8 columns. You want to allocate the resources available. You have already said that, of course, you required in your step 1. Remember, in this step 1, this is what you require, total required key factor. The total available key factor is what you want to allocate now. All right. So you then go to that step 5, where you have your allocation table. The first item will be, the first column will be the ranking you have done in step 4. After the ranking, you put the products that you have ranked. Then you are going to have units, another column for units. Then you are going to have key factor per unit, which you have determined in step 1 also. Then you are going to have total key factor. After total key factor, you need to have cumulative of your total key factor. No space, so I need to put it CUM. CUM simply means cumulative. Then after cumulative, you are going to have balance. Then after balance, you are going to have optimal product mix. That's your final answer, where there is no minimum allocation. But where there is minimum allocation, there will be 2 different allocations. So rank 1, rank 2, rank 3, for example. So for each product, let's say this is product A, product B, product C. So you appreciate it more when we have live questions to demonstrate all of this. Just put all of this there. So this is the format for allocating the limited scarce resources. Then move to step 6. Step 6 says, determine the optimal product mix. Determine the optimal product mix or optimal production plan. Examiner can also call it optimal production plan. All right. So what do you do in this regard? This can be identified. This can be identified or picked from step 5 above. So whatever you have here, that's your optimal product mix. That's the unit to be produced to maximize contribution. That's your optimal production plan. Okay. Then finally, step 7, determine. Now, in this step 6, if where you have minimum allocation, you are going to have more than one allocation. So that minimum allocation plus the optimal product mix you have in this table. So you add the 2 of them together, that will be the total optimal production plan that you are going to produce to maximize contribution. So step 7, examiner can ask you to determine the profit derivable from your allocation. Determine profits derivable from the allocation. Okay, so that's all you need to do. All right. So to do this profit derivable from the allocation, of course, you can then say income statement using, let me do it this way. from the allocation using the formats below. Okay, if you want to do this, just say income statements. All right. Say, for example, you have 3 products, product A, B, C. Then you are going to have a column for total for the organization. After this, you are going to have the production plan. This production plan is what you have in step 6. Whatever you want to produce in units, put it here. Then you are going to multiply the contribution per unit. So you are going to be given the contribution per unit, put it there. Then, of course, you multiply, okay, to get the total contribution. This is the total contribution. After the total contribution, of course, you had all the total contribution together. You are less concerned for each product. Then the next thing you need to do is to less fixed overhead. Fixed production overhead. Okay. So this fixed production overhead, you don't allocate it to any of the products. Just give it straight to the company as a whole. So whatever it is, put it there. When you less your fixed costs from the total contribution, you are going to have net profit, or of course it has to be net profit because you want to maximize contribution. Okay, so this will then be the net profit. So finally, this is what you need to do. This is what you need to do as far as optimal product mix is concerned. So this is where we are going to call it a day. In our next class, by the grace of God, we are going to solve 4 different illustrations. 4 different illustrations. One illustration where there's just a general question. It has nothing to do with any of those other questions, just regular question. Then the second illustration we are going to solve will be optimal mix, where there is minimum allocation. How do you treat it? So we are going to discuss that. Then the third question we are going to solve will be optimal mix involving make or buy decision. Then number 4, we are going to solve a question where that's optimal mix involving special order. So how do you, because each of them, there are different ways you are going to treat it. So by the grace of God, in our next class, we are going to be discussing all of that. So let me know if you have any question for me before we close the class for today. Any question for me? All right. So in the absence of no further question, thank you guys for joining the class. We are going to meet next time by the grace of God. Bye-bye, everyone.
Thank you very much.
You are welcome.